Hey everybody, Denitza here with Ray Financial Services. How are you? I will just wait a few minutes for a few people to log on. Uh, I will be doing a live today about 10 ways to help you save for a mortgage. Summertime is coming up, and this is the time when, most people are thinking about moving because their kids are out of school. Maybe they're moving out of state, changing jobs, what have you. So I felt that this being mid May, it's definitely a good idea to just talk a little bit about it. Usually my lives are kind of long. This one really won't be that long. Um, but it looks like a few people are joining. So I'm just going to go ahead and get started. I don't think I'll be able to see your comments because StreamYard, for whatever reason, sometimes it doesn't catch all Facebook comments. But if you have a question, a comment, you can always email me and I will provide you with my email address at the end. Alrighty. So, with that said, as you know, saving for a mortgage because we've done it ourselves requires careful planning. It requires, very good discipline. You really don't want to deviate from any of your budgets, anything that you have set into place to get you that mortgage, right? To get your home. So that leads me to my first point. So you want to set a savings goal. Okay. You always want to be goal oriented in anything that you do, but especially for saving for a home because it's one of our biggest purchases that we'll ever make in our lifetime, right? I mean, yes, you have your car payments, but your home mortgage is the biggest investment that you're going to make for yourself and for your family. So you're going to want to determine the amount that you need to save or that you want to save for a down payment and your closing costs. Sometimes you'll get lucky and your builder if will help pay for your closing costs, which is what they did for us. So we were able to save about 8,500, I think, 8,000 to $8,500 when we bought our first home. So you may get lucky and they may pay for that, but not all builders do. So you're definitely going to want to determine the amount that you want to save for a down payment and closing costs. You're going to want to set a realistic savings goal based on your income, based on your expenses, based on the price range of the homes that you're considering and the location and the area. So pretty much like a standard down payment would be, or the minimum standard down payment would be like a 3% down for your standard mortgage. Okay. Generally, or typically, people usually put down about 12%. That's the average. I believe that's about what we put down when we purchased our home is about, I think we did either 10 or 12%, but most home buyers end up doing a 12% down payment. If you want to avoid that horrible, pesky PMI or private mortgage insurance that literally does nothing for you, you literally do not gain anything with it except for an added expense on your home loan, then you're going to want to do 20% down if you can afford it. We weren't able to do the full 20% down. So unfortunately, we had that pesky PMI, which added an additional, get this, $92,000 to our home loan. Yes, that is how much PMI can definitely cost someone based on, of course, their loan, their time of the loan. So you definitely want to, have that come into play too. If you can't afford the 20% down, just don't be shocked if you get stuck with PMI. Okay, but I mean, the good news for that, you can always refi later on, like I believe after a year, which is what we did after a year and a certain amount of payments in to get rid of that. Okay, so that was the first part. So, secondly, of course, create a budget. I'm all about budgeting, creating budgets as a financial coach. We definitely need to do that. To do that, you're going to track your income, you're going to track your expenses, and identify areas where you can cut back and save more. Okay. And you can allocate a portion of your monthly income specifically for savings towards your mortgage. There's a really good app that I like, and it's free, that kind of helps with that. And it's Mint, MINT.com. And it's a really handy free tool for you. Okay, you're going to want to automate your savings. That's the third point. So you're going to want to set up automatic transfers from your checking into like a separate savings account, which is dedicated only to your home buying funds. Okay, you want to have a separate account specifically for that. So that way, you know that it's for that. You're not tempted to like, take a little dip into that account. A lot of times it may be easier for people to have it done automatically from your paycheck. So say you want to deposit into a separate banking account for your home mortgage, about 1%. Okay. It's not much, but it's something. Then you'll have that 1% go from your paycheck to that next bank account. And then it'll start up that automatic savings. You're not going to see it. You're not going to touch it. Out of sight, out of mind, right? I think that's a very good way to do it. We did that and it helped. Okay, so four, you and I do have my notes here because I don't want to miss anything. So you're going to want to reduce any unnecessary expenses. So you're going to analyze your expenses. You're going to identify your non-essential items or services that you can cut back on. So say you pay for Amazon Prime, you pay for Netflix, you pay for Disney Plus, etc. What one are you not using as much? So you have kids, so you use Disney Plus more than you use the Amazon Prime, X Amazon Prime. Okay, so think about it, reflect with your partner, your spouse, whoever it is that you're buying a home with, and see, little expenses like that can definitely pay dividends later. Okay. You're cutting back on unnecessary expenses, maybe eating out less. If you're used to eating out 5 to 7 days a week, cut that down to 4 to 3 days per week, or even, or, being a real go getter. And if you're used to eating out about 6 times a week, do it for one. Okay. Only eat out one time a week. I know it's a pain. I know you're going to have to cook and spend money on groceries, but trust me, in the long run, you are going to see, especially if you use the Mint app or any other financial app, you'll see how much you're actually spending on eating out versus only eating out once a week. You will save hundreds of dollars. And over the month, you may save thousands of dollars. Go out, if you do have to go out and get food, try to not use premium apps like DoorDash or Instacart. I use it, I'm guilty of it, but I use it because I can't really walk and shop because I have to have knee replacements. So my mobility is a bit hindered. But if you're able, go out, get your own food, get your own groceries, and that will eliminate a lot of, unnecessary expenses because you'll save on delivery fee, you'll save on having to provide a tip, and, everything else that comes with a premium service such as that. Okay, any unused subscriptions, like I said, going back to the streaming, cut back on a streaming service, or you get the digital version of the LA Times or whatever, and you get the paper version. Well, do one or the other. Either knock out the digital and keep the paper, or keep the paper and knock out the digital. Okay. That will definitely help you. Reducing entertainment expenses. So, say you go to the movies twice a week, cut it down to just once a week, and you will see a savings. I mean, remember, you're trying to purchase a home, okay? Let's see here. So, number 5, increase your income. So look for ways to increase your income, and you can do that with a variety of ways, such as taking on part-time job just temporarily if you need it. Some sacrifice is needed when you need to buy a home and make large purchases. You can do freelancing. You can be a contractor through the aforementioned apps that I said, like DoorDash or Instacart. You can do that. There's a lot, or selling on Amazon, eBay. There's lots of ways to increase your income. Okay. Minimize your debt. So if you can, and if you're able to, you want to pay down your high interest debt first, such as credit cards or personal loans, as of course it will, you know, improve your credit score. It's going to increase your buying power or your borrowing power because, one, you don't have all those debts and you have a higher credit score. Minimizing your debt also helps you allocate more funds toward saving for a mortgage. So think about it. If you don't have a $200 monthly payment to Capital One, that's 200 extra dollars that you can throw into your mortgage savings account, right? So lots of ways to do that. If you can't do that, then I recommend the debt snowball method. That's how we had to do it. Um, and in a nutshell, basically, it's paying off your smallest loans, your smallest credit cards ASAP, as soon as possible. And then you take that minimum payment and you roll it into the next smallest credit card that you have. So you're snowballing it. You're making that little itty bitty snowball greater each and every time. And then eventually you'll get out of debt, right? You won't have any of those credit cards. And you'll have that much more money to put into your savings account for your mortgage. Take advantage. So, number 7, take advantage of employer benefits, right? So, some employers may offer matching program contributions to a retirement account like a 401k. So, if you're buying a first time home, then you can borrow money from your 401k and use it to help you purchase a home. Personally, I don't recommend that because I want to save my retirement money for what it is, retirement. But if you need that extra boost, there's definitely not a problem to borrow from your 401k. You just need to make sure you put it back and within the time specified by your bank or lending institution. Okay. Some employers may even offer down payment assistance. You never know. You can always check with your employer and then take advantage of such benefits like that to accelerate your savings, right? Uh, explore. So for number 8, explore government programs and grants. There's lots out there. You just gotta, get off your tush and do the research. Put forth. We do so much researching on the internet for everything else in our lives. Why not do it to explore government programs and grants to help you get a home? And they can help you with closing costs. They'll grant you money. Like I know California recently had a home buyers grant where they granted you X amount of money to help you buy your home. Okay. So there's great programs like that out there. Those types of programs can vary by location. So you definitely want to check with your local housing authority or consult a mortgage professional for that. If you need a mortgage professional like a real estate agent, I do have some connections. Just feel free to shoot me an email and I can get you, hooked up with one of them. Let's see. So even like random grants, like random places like the USDA, you would think that would be like a farming grant or whatever, right? No, they actually give out home grants. Number 9, save windfalls and bonuses. So if you received an unexpected windfall, like, a tax return or a tax refund, right? Throw it in that savings account. Just throw it in there. Don't use it. Don't look at it. Just keep it there. Okay. And that will help you grow quickly. If you get a work bonus or monetary gifts from people, resist the temptation to save it. Just throw it into that savings account. I also recommend trying to find a high bearing interest account or or account that gives you compound interest that will grow very quickly as well. You can talk to your financial advisor more about that. So finally, you want to be patient, but be persistent. Okay. Persistence and patience are not only virtues, but they're definite keys to being able to save, right? Because saving money takes time for anything, but especially for a mortgage, because you may have to put down huge sums of money for down payments and closing costs. So, as long as you stay focused on your goal, you're going to maintain your savings routine. And remember that every dollar that you bring home and save will get you that much closer to owning your home, which provides lots of benefits in itself, both financially, internally, something to pass down to your kids, when when you eventually pass away. Um, so yeah, so those are the 10 best ways, in my opinion, as a financial coach and tax strategist to save for a home mortgage. And it's not something that I haven't done. It's all the stuff that I used in my journey to buying our first home. It took us many, 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 many years to buy our first home, but we finally did. And it was with patience, and it was perseverance, and it was with persistence, and it was with grit and determination, uh, and lots of sacrifice. Some of you may know, you've heard my story before. We've actually had to move out of country for 3 years to be able to get out of the debt that we were in, with student loans and credit cards and car loans and all that, because lots of things happened over the course of several years and it just all piled up, and we had to do it bankruptcy years and years ago. So we had to overcome a lot, but we stuck through it. We plowed through it. We sacrificed everything and anything that we could, and we finally purchased a home. It took the pandemic for us to do it, but we finally purchased our very first home in 2020. We moved in 2021. And that was pretty much on, one person being self-employed, me, and then my husband's W-2 income. But it takes a very long time, and you have to make sacrifices, and you'll get there. I definitely know it. We did it. You can do it. So anyway, so for all of this, it's always advisable for you to consult with your mortgage professional, or financial advisor or financial coach, tax strategist like I am, who can provide you with the personalized guidance based on your specific set of circumstances and goals. Okay. So that's it. That's it for me. Again, unfortunately, I cannot see if anyone has commented, but if you do have any comments or questions come up, go ahead and email me. Okay. I'm going to put my email here. I hope you guys can see it. So it's my first name, which is on the screen here, Danitza, at ravefinancialservices.com. So it's just like how it is on my name on the screen. So Danitza at ravefinancialservices.com. That is my email. Okay. And if you want a transcript of the live, definitely shoot me shoot me an email, and I'll shoot you a free copy of that. Just so that way, that's just one extra tool that you can have in your arsenal for savings and reminders. Okay. Don't forget to follow me and like me on Facebook. Like my business page and follow my business page on Facebook as well, Rave Financial Services LLC. Subscribe to me on YouTube at Rave Financial Services LLC for more content about taxes and tax strategy and credit repair and financial coaching. Okay, because that's my expertise, is financial services. If you need an appointment, feel free to book one with me at ravefinancialservices.com. Okay, I'm going to put that in the comments. and we can talk or email or chat, whichever you prefer. Okay, whatever your best mode of or your favorite mode of communication is, it's perfectly fine with me. So anyway, thank you so much for tuning in. I appreciate that. If you need anything, definitely reach out and email me, and I will talk to you all soon again. Again, Danitza with Ray Financial Services. You have a beautiful day.